Hey guys, SGT here, and if you aren't interested in mining stocks or stocks in general, then you can turn the interview off right now, no offense taken. As many of you know, guys like Peter Schiff, Eric Sprott, John Embry, and Ron Hara are very bullish on the future of mining shares. Others, like Chris Dwayne, Andy Huffman, and Bix Weir, would suggest you get out of the market altogether. This is going to be digging deeper with the chairman of Brazil Resources and the co-founder of Uranium Energy Corp, Amir Adnani. Amir, before we get started, first let me welcome you to the show.
Thanks for having me.
Thanks for taking the time. Mr. Adnani, a lot of these guys in the precious metal space have already interviewed you. I know Doug Casey's a big fan of yours. I want to address some things about the precious metals industry because so many people in my audience, including me, are very gun-shy about owning stocks in an environment where MF Global can literally take segregated client funds and nobody goes to prison. And the recent court ruling by the Seventh Circuit Court in which the court said Sentinel's use of $500 million in segregated client funds to secure a loan was proper use of those funds. What would you say to folks who are gun-shy about owning stocks in an environment like this?
At the end of the day, I'm sure any investor is going to look at owning physical bullion, but you're not going to put probably everything in that. And I'm sure if you have, let's say, a portfolio where you've got some bullion and some of the majors, and perhaps you start to think about some of the juniors out there, you really got to, I think, start that process by understanding the people, and then from there dive down to the various other issues as far as projects, jurisdiction, et cetera goes. In terms of the business that I'm in, being the junior resource and mining business, there's you mentioned Doug Casey, and people like Doug, and Doug particularly is kind of famous for saying the key to successful investing in the resource sector is the 3 Ps, or the rule of the 3 Ps, and that being people, people, people. So in this business, I think a lot of investors become acquainted and familiar with the track record and capability and sort of the teams that are out there making discoveries, developing projects, de-risking them, and taking them through to production. And when you consider all of that, and you consider that this is an industry where perhaps 10% of the companies and people are creating 90% of the value and the developments, then this point really does make sense and drive home a strong message.
Absolutely. And full disclosure for the audience, I do own some paper stocks. People know that I am not just one of these physical precious metals guys. I own some PSLV, some NGD, Great Panther Silver, and some others. I do not own any Brazil Resources, but I want to make one point. Our friend Vision Victory, Dan, has released commentary recently in which he said, I see no scenario in which gold soars and stocks become worthless. And I tend to agree with him about that. So let's zero in a little bit about Brazil Resources. What do you see as the risk for political instability or nationalization risks in Brazil?
I think Brazil has one of the best profiles out there today, not just in South America, but in the world, in terms of being one of the best places and jurisdictions to invest in for exploration and mining. And the country has seen really a massive increase of net inflows for investments into it over the last 5 years. You've seen current President Dilma Rousseff really carry many of the same key policies that former President Lula had put in place that has sort of created this Brazil miracle, this economic growth that's taken place there, along with a real democracy and a system that has the rule of law and hasn't had the same type of checkered background as, let's say, some of the other South American countries have had with expropriation and nationalization of assets, which really destroys, of course, value and is a really dangerous thing to have to consider. So, Brazil is the B in BRIC countries. You've seen some wonderful progress get made there, along with the fact that they'll be hosting things like the World Cup and next summer Olympics. The mining sector there has really seen meaningful growth, and when it comes to gold, which is the metal that my company is focused on, Brazil Resources, you see companies like Anglo Ashanti, Kinross, Yamana are very involved in Brazil. Some of the senior people at Anglo Ashanti have recently highlighted the fact that this is going to be one of the key jurisdictions for them, that they want to be pursuing growth and some mid-tier producers like El Dorado and other kind of up-and-coming producers. So you can see that there's real development taking place. It's really got the attention of the bigger guys, and it is because of the climate that Brazil provides, which is this very attractive combination of the right geology. Of course, the rocks have to be there, right? And if the geology is right and you've got an attractive gold endowment and the country is ripe for exploration, and you combine that with good rule of law, good mining code, and a good track record in terms of the country's ability to attract capital, that's a winning recipe for mining. And you just don't see too many jurisdictions in the world today that give you all of those sort of combinations of advantages in one place. Brazil really stands out, in my opinion.
The other thing I wanted to ask you about, too, Amir, is all of us in this space are very, very aware of how precious and rare gold and silver are in physical form, and how darn difficult it is to locate it, mine it, and refine it. Can you talk a little bit about that? I mean, talk about the strategies and the difficulties, and then tell people what you see in the future. How quickly could Brazil Resources be producing gold?
You know, when you look at the mining sector today, especially gold mining, it's quite evident that besides the fact that there's a scarcity of quality ounces in the ground that could be developed into mines, there's a real issue and inability out there, not just by juniors, but by the number of majors that have announced project delays or cancellations due to massive rising costs in both capex and then obviously the subsequent operating costs. And so we're in an environment where these mega-scale projects that for years were very attractive to the majors have just become very difficult to keep on time and on budget. With a company like Brazil Resources, we've gone after making acquisitions in areas where there's good access and infrastructure available, there's good proof of concept around us. It's too early for us to right now come out and put a timeline on achieving further success with these projects, but you can see so far we've managed to go from that initial acquisition sort of entry point to getting to a point right now where we can show a very good-sized property portfolio with ounces in the ground. And as we do more studies over the next 6 to 12 months, we'll be able to better outline a timeline. And for the time being, you need to really kind of, I think, be mindful of the advantages associated with being in a proven area where there's real development taking place.
Before I let you go, Amir, I know you're not in the business of making price projections, so if you'd rather not, then please don't. But I'd be remiss not to ask you, what is your personal feeling given QE3 and the ECB's propensity to want to buy bonds, sterilize bond purchases indefinitely and in perpetuity? If you had to, where do you see gold and the price of silver going over the next 12 months or even by the end of the year?
You know, I don't make sort of projections and just put a number out there, and I'm not really in the business of doing that. But I think when I just look at it and look at the data, look at how precious metals and gold have responded and what they respond to, which to a great extent is when we continue to have this negative real interest rate environment where with QE3 that's only going to exacerbate further and continue on. There's no doubt that is the backdrop for rising gold prices. In addition to the fact that over 50% of gold demand annually is still driven by jewelry demand. And when you look at the Indian wedding season coming up, when you look at the Chinese New Year after that, historically speaking, over a 30-year timeline, there's definitely a pattern here that's hard to ignore, which is the seasonality of gold. And the fact that you really see on a seasonal basis prices really start to pick up around August and carry forward with strong upward moves through the March of the following year. And that's a 30-year pattern that is there you can look at and really sort of supports the seasonality approaches. With QE3, the monetary aspect of it and the fiscal policy aspects of it really further again support the interest rate environment that we're in and how that supports the higher value argument for gold. So the backdrop to me, especially kind of where we are and the timelines today, definitely looks bullish and difficult to ignore these patterns and these realities.
And in addition to those seasonal patterns and the jewelry demand that you've spoke of, what we see now globally is central banks printing fiat currency but acquiring gold bullion, don't we?
Correct. I mean, that's a whole other kettle of fish, but it's obviously something that could definitely be a source of driving things, because that demand and the buying that comes in from those central banks is obviously in such great quantities, and it's going to be a big mover in the market.
Well, Amir Adnani, the chairman of Brazil Resources and the co-founder of Uranium Energy Corp., thank you so much for your time. We really appreciate your candor and your expertise in this area.
Thanks for having me.
Okay, thank you. Take care. Bye-bye.
Well, that's it, guys. Much more to come. Thanks for tuning in, and visit sgtreport.com for all the latest.